RBI Act 1934 പാർട്ട് 3യിലൂടെ നമ്മൾ ചില MCQs ആണ് ഡിസ്കസ് ചെയ്യുന്നത്. ഫസ്റ്റ് വൺ, ദ റിസർവ് ബാങ്ക് ഓഫ് ഇന്ത്യ ആക്ട് 1934 enacted by Imperial Legislative Council on ഓപ്ഷൻ എ മാർച്ച് 6, 1935, ഓപ്ഷൻ ബി 1st April 1935, ഓപ്ഷൻ സി 6th March 1934, ഓപ്ഷൻ ഡി 1st January 1934. ആൻസർ 6th March 1934. Next question. Which section of the RBI Act clarifies the RBI's obligation to transact government business? Option A, Section 19. Option B, Section 20. Option C, Section 21. Option D, Section 22. Answer option B, Section 20. Next question. The exclusive right to issue currency notes in India is vested with the RBI as per which section? Options: Section 20, Section 21, Section 22, Section 24. Answer: Section 22. Next question. What is the maximum denomination a banknote can be as per Section 24 of the RBI Act? Options: 5,000, 10,000, 2,000. No maximum limit specified. The answer is option B, rupees 10,000. Next question. Section 26 of RBI Act deals with option A, legal tender of notes. Option B, CRR. Option C, exchange of damaged notes. Option D, issuance of new notes. Answer option A, legal tender of notes. Next question. Which section states that RBI shall not reissue banknotes that are torn, defaced or excessively soiled? Options: Section 26, Section 27, Section 28, Section 31. Answer Section 27. Next question. According to Section 31 of the RBI Act, who else besides RBI can issue and accept promissory notes payable on demand in India? Options: A, commercial banks, B, state government, C, central government, D, any financial institution. Answer option C, central government. Next question. Section 42 of RBI Act mandates that scheduled banks must maintain options: A minimum number of branches. Option B, cash reserve with RBI. Option C, a specific ratio of loans to deposit. Option D, a certain amount of gold reserves. Answer option B, cash reserve with RBI. Next question. Section 42(1) specifies that the average daily balance maintained by scheduled banks with RBI should be a certain percentage of their dash. Options: A, gross time and demand liabilities in India. Option B, net time and demand liabilities in India. Option C, total asset. Option D, loan portfolio. Answer option B, net time and demand liabilities in India. Next question. Which section defines terms like repo, reverse repo, derivative, money market instruments and securities? Options: Section 28, Section 31, Section 42, Section 45U. Answer option D, Section 45U. Next question. What is repo rate? Options: the rate at which RBI borrow from commercial bank. Next option: the rate at which commercial bank lend to each other. Option C, the rate at which RBI lends money to commercial banks. Option D, the rate at which commercial banks lend to the public. Answer option C, the rate at which RBI lends money to commercial banks. Next question. A decrease in the repo rate is likely to: option A, increase loan interest rate for the common man. Option B, decrease loan interest rate for common man. Option C, have no impact on loan interest rate. Option D, increase inflation immediately. Answer, option B, decrease loan interest rate for the common man. Next question, what is the primary objective of RBI when increasing the repo rate during high inflation? Options, to encourage more borrowing by banks. Option B, to increase liquidity in the economy. Option C, to absorb liquidity and control inflation. Option D, to boost economic growth. Answer, to absorb liquidity and control inflation. Next question, the reverse repo rate is the interest rate at which dash. Options, commercial bank lent to the public, RBI lent to commercial bank lent to RBI borrows from commercial bank. Answer, RBI borrows from commercial bank. Next question, when the RBI increase the reverse repo rate, commercial banks are likely to. Options, option A, lend more money to public. Option B, deposit more money with RBI. Option C, decrease their deposit with RBI. Option D, increase their lending to other banks. Answer, option B, deposit more money with RBI. Next question, the MSF rate is generally. Options, A, lower than repo rate. Option B, higher than repo rate. C, equal to repo rate. D, determined by market forces. Answer, option B, higher than repo rate. Next question, what kind of securities can bank use as collateral for borrowing under MSF? Option A, corporate bonds. B, gold. C, government securities within their SLR limits. D, equity shares. Answer, C, government securities within their SLR limits. Next question, NDTL stands for National Demand and Time Liabilities, Net Demand and Time Loans, Net Deposit and Time Liability, Net Demand and Time Liability. Answer, Net Demand and Time Liability. Next question, NDTL is the basis for calculating which of the following four banks? Options, profitability ratio, capital adequacy ratio, CRR and SLR, loan to deposit ratio. Answer, CRR and SLR. What is CRR or cash reserve ratio? Options, the percentage of NDTL that banks must keep as liquid asset. The percentage of NDTL that banks must keep with RBI in current account. The percentage of NDTL that bank can lend out. The percentage of NDTL that bank invests in government securities. Answer, the percentage of NDTL that bank must keep with RBI in current account. Next question, do banks receive interest on funds kept under CRR with the RBI? Answer, yes, at the repo rate. B, yes, at the reverse repo rate. C, yes, at a special CRR rate. D, no, they do not receive any interest. Answer, no, they do not receive any interest. Next question, what is the primary purpose of CRR as a monetary policy tool? Options, to increase bank profitability, to control liquidity in the system, to encourage more lending, to reduce government debt. Answer, to control liquidity in the system. Next question, what does SLR refer to? Options, the percentage of NDTL that bank must maintain as cash in their vaults. The percentage of NDTL that bank must maintain as cash with the RBI. The percentage of NDTL that bank must maintain in easily encashable asset like cash, gold or approved government securities. The percentage of NDTL that bank must lend to priority sector. Answer, the percentage of NDTL that bank must maintain in easily encashable asset like cash, gold or approved government securities. Next question, government business is discussed in which section of RBI Act 1934? Section 20. Currency issuance is discussed in which section? Section 22. Maximum denomination of currency notes is rupees 10,000. Legal tender is specified in Section 26 of RBI Act 1934. Toned notes is discussed in Section 27. Promissory notes issued by central government. Commercial banks must maintain cash reserve with RBI. Cash reserve ratio and SLR were based on NDTL, that is net time and demand liability. Financial terms were defined in which section of RBI Act? Section 45U. Repo rate means RBI lends to bank. A decrease in repo rate affect decrease loan interest rate. An increase in repo during inflation will absorb liquidity. In reverse repo rate, RBI borrows from bank. Definition of MSF: emergency overnight borrowing of commercial bank from RBI. MSF rate is higher than repo rate. Collateral of MSF: government securities within SL. NDTL means net demand and time liabilities. NDTL is used for determining CRR and SLR. CRR definition: it is the percentage of NDTL with RBI. Interest rate of CRR: there is no interest rate for CRR. The purpose of CRR: CRR controls liquidity.